Hey folks, Dan Frio here with your market update for September 25th, 2024. So we saw mortgage rates come down just a little bit yesterday. Are they going to continue today? Well, that's what we're going to talk about in this video. So in this video, we're going to talk about consumer debt. It's getting way out of hand. How's that going to affect the markets? The next thing we're going to talk about the carry trade. Remember the carry trade? Remember about a month or so ago, all of a sudden the market just dropped like 1,000 points. Everybody's like, what's going on? Then all the rumblings about the carry trade. I'm going to go over that, how that's now sparking once again. It might cause some corrections in the market. And then the last thing is a recession. What happens to the economy? What happens to real estate? What happens to the markets during recession? So that's what we're going to cover in today's video. So without further ado, let's get to these things. That's why you're here. So these are the top 6 programs people use when they're buying their first house. Now there's 5 pieces of major information that go behind these of what creates this score. Okay, so these people who qualify for these rates, they're buying their first house. It's a single family home, and they're going to live there. Okay, so that's 3 of 5 pieces of the puzzle. The other 2 pieces are right through here. We're going to dig into it. These people right here, they're putting down 25%, so they're financing 75%, and they have a 780 credit score, a 780 credit score. Sorry, I stumbled there a little bit. So if that's you, most likely that's your rate. If that's not you, I'm going to give you all my information at the end of this video so you can reach out to me, because no matter where you are in the country, I can help you. I'm licensed everywhere as well as Puerto Rico, and I'm a loan officer. So I'd love to help you navigate this environment if you're looking to buy a house or maybe refinance here shortly. But let's get over to the economic calendar that we have for today. Now today, you have to focus in on what is the Federal Reserve monitoring. Okay, and there is a load of data coming in the next 2 days. Okay, they're worried about the inflation. They say they tackled inflation, but they're going to continue to monitor inflation. And the main piece of that puzzle that they watch is what's called the PCE. So that number is coming out. The official number is coming out on Friday. We're going to see how that goes. Tomorrow's a load of data as well. So let's get over to the calendar. Wednesday, we have building permits. That's what's coming in today. They kind of came in line, but there is some deterioration in the sales piece. So building permits, last reading was 1.4 million. Came in at 1.47 million, a little bit better than expected. New home sales, 751,000 previously. They expected 699. It came in at 716. I'll take that as a compromise, put it that way. And then new home sales are falling off the cliff. Last reading was up 10%. Now they're down 4.7%. That's like a 15% swing. Okay, so that's what we have on the agenda today. That's what just came in. I'll show you how the markets are reacting to that. Tomorrow we have continued jobless claims. And again, let's focus in on what the Federal Reserve's monitoring. Jobs market and inflation. They said, okay, inflation, we got to beat on it, but they're still going to monitor this heavily. And then now it's the jobs market that they're really concerned about. So let's get over to here. Thursday, we have continued jobless claims. Well, let's go through. We went through what's coming in today. Thursday, we have continued jobless claims. And then we had the core PCE prices. That's not the PCE that the Federal Reserve really truly is watching. That's coming out tomorrow. So I'll explain that to you here in a second. Durable goods orders, GDP, how much productions we're getting out of the economy, and initial jobless claims. So that's the data that's coming in tomorrow that we'll be focused in on. And then on Friday, the number 1 inflation figure that the Federal Reserve monitors is the PCE. And that data is coming out in hordes on Friday. So an action-packed 2 days coming. Today, there's not that much news out there other than building permits and things like that. So that's what we have on the agenda right now. The bond market doesn't like this data. It's down 13 right now, so that means the mortgage rates are going to go up. When the price of a mortgage bond goes down, rates go up. Americans have on average $6,300 in credit cards. That's a lot of money right through here. Americans have $6,300 in credit cards. It's going to take you 1, 2, maybe 3 years to pay that off. The rates are usually 18 to like 25%. So I wanted to go over a scenario with you guys. There is a lot of refinancing going on right now. I think I took 4 or 5 applications yesterday. Mortgage refinance boom takes hold as weekly demand surges 20%. What a lot of people are doing, they're getting lower rates. And some people are consolidating some debts, high interest rate debt in this. So I'm going to post a video or a link down below. This is going to give you our refinance calculator. I apologize. I did a video previously and I didn't have the link in there. I'll go back and try to find that link. So I'll be putting a link down below. It'll be the first tab down in the description below. Check it out. What you're going to do is put in your loan amount that you took out originally, what the rate is, term, and when it started, okay? Then you're going to put in what your balance is. On average, down through here, put refinance costs, put like $2,500. And if you're really looking into refinancing, reach out to me, because the biggest piece of this puzzle when you're refinancing to the costs is your title fees. We usually don't have a fee as a lender, but you'll have a title fee. You might have an appraisal. Those will be the lion's share of the costs you have. So put $2,500 in there. Go back and see if you where you are in rate. I would put 6.25 in the rate for right now, and then put the 30-year term. And when you start, it'll tell you right through here how much you reduce your monthly payment, and then how much you're going to save over the life of the loan. So this person would save over $300 a month and save almost $100,000 by refinancing. So guys, you can refinance a conventional loan the day after you buy. So if you're building a house and your lender or your preferred lender is giving you all this great credits and all this stuff, take the higher rate. Take the higher rate and have all that money pay other fees. Don't buy down your rate. Close it and call us, and we'll refinance you right then and there, right after you close. Okay, so that's that piece of the puzzle. Let's talk carry trade. So what is the carry trade? Well, basically it's an imbalance between the rates in Japan and the U.S. Okay, so here's how it works. This is a perfect example. A carry trade involves borrowing or selling a financial instrument with a low interest rate, then using it to purchase a financial instrument with a higher interest rate. While you pay the lower interest rate on the financial instrument, you borrow, you're collecting higher interest on the financial instrument you purchase. So the profit is, okay, carry trade. Here's what happens is, let's say you borrow $10,000. Well, people were borrowing from Japan and at like 0% interest rates. Okay, so you borrowed 10 grand. So you bring that money back, and then you buy U.S. Treasuries at 5.25 or whatever. What's the spread? Well, you're paying 1%. You're getting 5%. The spread's 4%. So you're going to basically almost got risk-free to a point, they thought, trade at making 4%. But what they did with this is they compounded, and they basically I can't explain the instruments to you, but they magnified that 10 grand. So they actually took 10 grand, put that as a deposit, and got $1 million worth of money. So you put, it's like buying a house. You put a down payment, then the bank gives you money. So let's say they put 10 grand down, got $1 million in loans because they put down 10%. Here's the analogy that it's doing. So you'd make $40,000 by leveraging that position, and you're only paying 1% on the $10,000 initially and so forth. So this is what basically just blew up in everybody's face. What happened was the cheap money they were getting from Japan started raising their interest rates, okay? And then at the same time, our government was lowering interest rates. So the treasuries you were getting at 5, 6, 7% are now 3%. And as Japan raises their rates, if it comes equal, you're going to lose money. So now people are liquidating their positions to cover, and now that's what's causing the market to drop. So hopefully that gives you a little clarity behind it, but there is still more of a carry trade to be had. So be careful. That's all I got to say. Please watch the markets meticulously, and you can never pick a bottom. You can never pick a top. So just want you to understand, if the market goes through another hiccup, and they said it was the carry trade, it's this thing unwinding. Okay, so that's basically what's happening in the background. So please don't criticize me down below. I know I was just trying to analyze that or give you just a basic points of that. Here's what it is. Okay, the U.S. state dollars versus the yen. Okay, the problem was they don't want the dollar to continue to crash, and that would unwind this carry trade. So that's what's going on right through here. So the dollar to yen has been dropping. This started to be a concern. Now it turned a little bit. So that's good news so far for today. Okay, the next thing is let's go over and look at the portfolio we're starting to put together. So I had a good friend of mine last night. His name is Mike. He called me up and he said, Dan, you might want to do something. I love what you're doing on the channel. Why don't you put your own money to work? So take some of your YouTube earnings and actually buy stocks and show people how this compounding and how you can add to your investments every month. It's called dollar cost averaging. You can show people over time how it works. So over the last month, I've been advising you guys on things that you might want to be interested in investments. Okay, so I explained a couple things like what's an ETF. What is a mutual fund? What is a stock? Things like that. So I gave a couple recommendations on things that you could do your homework on to see if these investments would fit your risk threshold. I guess I'll put it that way. And so let's go through, see how these are doing today now that the market's open. So the XLF is a basket of financial stocks. It is down 28 cents right now. We have Berkshire Hathaway. Berkshire Hathaway is just getting plummeted, just getting clobbered right now. It's down 1.6% since we bought it 2 weeks ago. So that's what's going on with Berkshire Hathaway. And Berkshire Hathaway, they own just tons and tons of companies. So this is a good way to play just the overall market. BITX, that is Bitcoin, but on steroids. Okay, so what this thing does is it gives you double the returns on what Bitcoin's doing. Okay, so that's what BITX is. That's up 22% over the last 2 weeks. And then we have the SPY. This is the top 500 companies in the country. If you buy this, you're buying a little bit piece of every one of those companies. And then that's up 4.62% within the last 2 weeks, or since we actually made that purchase as well. So these are some things that we're monitoring on a daily basis. If you want to recommend some things that we actually take a look into, please do so. I don't deal with options and things like that. If you're going to deal in that, you need your own financial planner. Because those get really risky. So if you're dealing in options and other vehicles like that, please reach out to a financial advisor at that time. So I'm not telling you to buy these things. All I'm asking you to do is do your research and see if any of these fit your threshold. And if you got any others, I'll be adding to this position. I'll be moving things around just to let you guys know how we do things. I usually buy and hold. Bitcoin might be a position you go in, you make 20% or so, and then you sit on the sidelines, and normally it comes back down a little bit, and then you can entry again. But I'm a buy and hold person. I've learned the hard way this way. I just dabble in. I buy a little bit here, a little bit there, a little bit here, and accumulate it over time. So that's what I've been doing there. Right through here. What happens during a recession? Well, that's what we're going to talk about later today. You might think, well, if a recession hits, everybody's going to lose their job, everybody's going to lose their homes, house prices are going to crash. It's kind of the opposite, okay? And I'll go over that later this afternoon. And then Mike at Altos Research, he just put a video out. You have to watch this thing. Okay, if you're interested in housing and you want to know what's going on and why hasn't the housing market crashed in prices, check out Mike's video. He's right on point. So my name is Dan Frio. I do this video every day, actually 2 times a day. I give you the opening bell and the closing bell. Today, the date is just not there on the financing side of homes. We just have home housing starts, but tomorrow and Friday is going to be a huge day when it comes to interest rates and the overall market. So I'm thinking today might be the calm before the storm that we see tomorrow. So that's the report for today. If you're out there and you need some help, maybe trying to buy that first house. Maybe you were working with a builder and things fell through and you need some help. I'd love to help you. Maybe you're looking to refinance. You went through the calculator and like, Dan, man, I could save $300-400 a month. What do I need to do next? Well, those are things we can help you with. So go to therateupdate.com. Here's my website. You can do a few things here. If you're looking to buy that first house, stop right now. Click the grant finder. It's going to give you options for grants all over the country. And we're located in the Chicagoland area, so we have a grant. The Federal Home Loan Bank gave us $1 million to use for down payment assistance. So if you're in the Chicagoland area, please reach out to us and see if you qualify. We got $10,000 per person if you qualify for this program. So you can click right there and check it out, see if you could qualify. But if you're out there and you're like, hey, Dan, how do I just get the ball rolling? Well, you can hit the Apply Now button right through here, or just scroll down to the bottom. You're going to find our 800 number as well as my email address, and it's right here. The 800 number is 844-775-5626, or my email, and this is me, folks, is dan@therateupdate.com. So feel free to email me or just give us a call. There is no call center. It's me, Alan, and David. We'll be answering the phone, so feel free to give us a call. Well, that is it for today. This morning, folks, we will be live. Kyle Seagraves and myself will be live today at 2:30 Central Time to answer any questions that you have in regards to buying your first house, maybe your second house, investment properties. Maybe we can even talk a little bit investments, but the main purpose of this channel is real estate. So thanks for watching, folks. If you haven't subscribed yet, do so over there if you don't mind. I'll see you tomorrow, or I'll see you later this afternoon. My bad. Take care. See you then. Bye-bye.